Welcome back to Wealth Navigators. In today's video, we're diving deep into essential strategies for saving and investing wisely. A must-watch if you're serious about financial freedom, wealth building, and securing your financial future. Whether you're just starting on your financial journey or optimizing your existing plan, we'll cover top saving strategies, investment tips, retirement planning, and more. Stick around to discover how you can maximize your savings, leverage compound interest, and diversify your investments for long-term success. If you like this video, all we need from you is to like, subscribe, and hit the notification bell to help the YouTube algorithm grow us. Drop a comment below if you've tried any of these methods or if you have other suggestions. Saving money is the bedrock of financial stability, a vital component of wealth management, and crucial for achieving financial independence. As living costs rise, establishing a solid savings plan becomes non-negotiable. Start by automating your savings, directing a portion of your income to a high-yield savings account or a money market account. This pay-yourself-first approach ensures you build your emergency fund, future investments, and retirement nest egg. Consistent saving is key to navigating financial uncertainties, such as unexpected expenses or economic downturns. An emergency fund is your financial safety net, protecting you from unexpected life events. It's essential for everyone aiming to avoid debt and maintain financial health. Aim to save 3 to 6 months of living expenses, keeping the funds in an easily accessible high-yield savings account. This strategy not only offers liquidity, but also provides a modest return. By preparing for unforeseen circumstances, like job loss, medical emergencies, or sudden home repairs, you prevent the financial stress that can derail your long-term financial goals. Effective budgeting is the foundation of financial success, enabling you to control your spending, increase savings, and invest wisely. Start by tracking your income and expenses, using budgeting apps or spreadsheets to monitor cash flow. Implement the 50-30-20 rule. Allocate 50% of your income to necessities, 30% to discretionary spending, and 20% to savings and debt repayment. Regularly reviewing and adjusting your budget allows you to stay on top of your finances, ensuring that every dollar works towards your financial goals. Investing is the cornerstone of wealth creation, and understanding your options is crucial. Stocks, bonds, mutual funds, ETFs, and index funds offer varying risk and return profiles, each serving different financial objectives. If you prefer a hands-off approach, consider robo-advisors or automated investment platforms that tailor your portfolio based on your risk tolerance and financial goals. For a more personalized strategy, consult a financial advisor who can guide you through the complexities of the market and help you optimize your investment portfolio. Diversification is a fundamental principle of risk management in investing. By spreading your investments across different asset classes, like stocks, bonds, real estate, and commodities, you reduce the impact of poor performance in any single investment. A well-diversified portfolio balances risk and reward, helping you achieve steady returns while mitigating market volatility. Consider international diversification as well, investing in foreign markets to protect against domestic economic downturns and currency fluctuations. Compound interest is the secret sauce to long-term wealth accumulation. The sooner you start investing, the more time your money has to grow exponentially. For instance, investing $10,000 with an annual return of 7% could grow to over $76,000 in 30 years, thanks to the power of compounding. Whether through stocks, bonds, or mutual funds, consistent investing combined with compound interest can turn modest savings into substantial wealth over time. Remember, the key is starting early and letting your investments grow uninterrupted. Retirement planning should be a top priority in your financial strategy. Contributing to employer-sponsored retirement accounts like a 401k or 403b is a no-brainer, especially if your employer offers matching contributions. Additionally, consider opening an IRA or Roth IRA for tax-advantaged retirement savings. The earlier you start, the more time your investments have to grow, setting you up for a comfortable retirement. Don't forget to regularly review your retirement portfolio to ensure it aligns with your changing financial goals and risk tolerance. Real estate investing can be a powerful addition to your portfolio, offering both income potential and long-term appreciation. Whether you're interested in rental properties, house flipping, or investing in REITs, real estate investment trusts, it's essential to understand the market and the responsibilities that come with property ownership. Real estate provides diversification, tax benefits, and a hedge against inflation, making it an attractive option for those looking to enhance their investment strategy. Maximizing your investment returns involves minimizing taxes. Utilize tax-advantaged accounts like IRAs, 401ks, and HSAs to grow your investments tax-free or tax-deferred. Consider tax loss harvesting, where you sell underperforming investments to offset gains and reduce taxable income. Regularly review your investment portfolio with a tax advisor to ensure you're taking full advantage of available tax-saving strategies, allowing you to keep more of your hard-earned money. The financial landscape is constantly changing, and staying informed is essential for long-term success. Regularly review and adjust your investment portfolio to reflect your evolving financial goals and market conditions. Keep an eye on economic indicators, interest rates, and global events that may impact your investments. Adaptability is key. Being able to pivot your strategy in response to market trends will help you stay ahead and maximize your investment potential. In conclusion, saving and investing wisely requires a blend of discipline, knowledge, and strategic planning. By implementing the strategies we've discussed today, like building a robust savings plan, understanding diverse investment options, and minimizing taxes, you're setting yourself up for financial success. Remember, the journey to wealth and financial freedom is a marathon, not a sprint. If you found this video valuable, be sure to like, share, and subscribe for more insights into personal finance, investing, and wealth management. Until next time, happy saving and investing.